What's been happening on Wall Street recently, you ask? Well, let me paint you a picture. Imagine a wave of optimism sweeping across the trading floor as US stocks surge, with the Dow, S&P 500 and Nasdaq all posting significant gains. Among the catalysts for this rally was some comforting news on the inflation front. The core consumer price index, the pulse of the nation's economy, rose by a modest 0.2%, helping to cool the heat of inflation worries that had been simmering. And it wasn't just the statistics that were turning heads. There was real, tangible evidence of a thriving economy. Major players like JP Chase, Goldman Sachs and Citigroup reported robust earnings, injecting a healthy dose of confidence into the market. This positive wave didn't just stop at the doors of Wall Street. It rippled outwards, causing the VIX fear gauge, Wall Street's so-called fear index, to fall. This drop is a clear sign of investor relief, a collective sigh echoing through the halls of finance. As the VIX fear gauge fell, the market breathed a sigh of relief, indicating a positive outlook among investors. Major banks have been in the spotlight, but why exactly? Well, it's largely because of their robust earnings. Powerhouses like JP Chase, Goldman Sachs and Citigroup have been posting impressive figures. JP Morgan, for instance, posted record annual profits of $54 billion, with its net income soaring 50%. Quite a feat, wouldn't you agree? But it doesn't stop there. Wells Fargo also exceeded profit expectations with a nearly 50% jump in net income. And let's not forget Goldman Sachs, who led the charge in global mergers and acquisitions last year, showing their strength and adaptability in the face of challenging market conditions. These significant earnings have done much to boost market confidence, with investors eagerly anticipating the quarterly earnings reports from Bank of America and Morgan Stanley. So, as we watch the markets, we can't help but feel a sense of optimism. After all, when the banks thrive, it's a positive sign for the rest of the economy, right? With such a strong start to the year, what might we expect next from Wall Street? Well, as the market continues to climb, analysts remain divided over the future actions of the Federal Reserve. Some anticipate further rate cuts, while others predict a holding pattern. The Federal Reserve's decisions on interest rates and inflation trends have been key drivers of market performance and will undoubtedly continue to shape Wall Street's trajectory. In addition to monetary policy, geopolitical factors are also at play. The recent surge in oil prices, spurred by escalating tensions on the global stage, has added a new layer of complexity to the financial landscape. This could potentially have a ripple effect on Wall Street, influencing both sector-specific stocks and the broader market. Bank of America and Morgan Stanley are set to release their quarterly earnings reports, and these will certainly be closely watched. As we've seen, strong bank profits can provide a significant confidence boost to the market, and investors will be keen to see if this trend continues. With robust bank earnings and eased inflation concerns, Wall Street seems set on a promising path, but as always, only time will tell.